Welcome to TradeTheNBI.com. This is John. This report is for the 1st of August. Didn't take much for things to turn around. We weren't expecting anything but just fill back of the pop-up that took place over here. We ended up a little bit of a continuation as we ended up continuing our drop in the shakeout and coming off of the spike in the algo to the short side, back from right up at the peak, which is perfect timing on that. But then we already have a reset of steel, which is short-term buyers. They've turned around at the same time. We have green over red, and this is if it continues, would be the start of the first rising shakeout right at the ABM levels. And again, this is what we talked about them for, because above the 76, pretty straightforward. If I can get the window to pop up here. There we go. Which is the 2809 for the 76%. And then, of course, at 2017.50, you have the ABM yellow. And all the way down at the magenta was the 2795. Didn't even reach that one. I mean, this has been pretty strong. Doesn't mean that there haven't been enough movements in between. I mean, the range has been fairly decent. It's just that, again, you have huge economic growth, despite the gloom and doom and everyone thinking that the sky is falling. It's still hard to get away from the fact that that's true. Throw in the fact that you do see the built-up pressures for some inflation taking place. This is an often missed one. The market has to value that devaluation of the dollar value in its overall price structure, and that usually means it's going to increase because its purchasing capability has been greatly diminished. So this is a little factor that often weighs on things that people don't necessarily recognize. It seems like a counter move, but it's not really. So the NQ we talked about before, it suffered significantly more damage. The readings were far weaker, and you can see the big difference right there. I mean, once you have the green under the red, you're certainly coming from a softer spot. Not having steel coming from below and above too makes a difference. It kind of traded parallel to it right there. Still, shorts aren't exactly, skyrocketing on this one. In fact, going to be making lower peaks here, which usually is net bullish, so you would expect some type of lift off if you get enough midterm buyers to jump into it. It's a little early for that. Probably at the beginning of next week, the new fund money for August will come in, and that should create an additional volatility spike for us. And the euro maintaining itself outside of this high-end range just supports S&P, plain and simple. I'm not seeing anything happen from a treasury standpoint. This is just dead. Get the first little bit of short-term buyer there. In fact, you may even get an orange dip a little lower, which would be as close to a buy configuration as you get, particularly given the dip below the red line. We've already retested those lows. Kind of a counterintuitive play given what we're seeing here with oil maintaining its elevated levels now. I mean, fine, yes, we ended up with the move back here to the ABM green lines. From the buy reset, we ended up with that softness here, but we didn't get a reset of any kind that would justify that it's going to rise further beyond this point. In fact, it's been fairly weak in general, even though it's been holding up relatively okay, and some of that we talked about before was just about maintaining that inflationary status of being able to trade as an alternative to treasuries, as well as or even being in stocks. It's been kind of an in-between play, I think, for a lot of people, and it's certainly more liquid than cryptocurrencies in some cases. In fact, I think Bitcoin has still been struggling a bit, yeah. And it's just been caught in between that range. You're getting that move from 6 to 8 and back in between. So from a gold standpoint, it's still not producing anything. There just isn't enough drive in the inflation numbers yet. But that's always going to be a lagging situation. You're going to see where gold just makes a massive spike, and people will be late getting into the charge of it. So if we take a look at the 5K action, it was kind of fun. So from the previous day, I marked a couple of these just because they were good, but I'm going to shrink it just a little bit more to get the entire day's action. So before, we had these nice little spikes. We ended up with a little bit of a short move right there that turned around pretty darn quick after it retraced a little bit, and then we spiked up. We got the overbought positive extreme retrace setups, filled those in beautifully. And then we reset with a new buy configuration right at the 50%. And that led to this nice move that started to skyrocket. And then we ended up with the gold at the peak, but then we started getting the conglomeration of those dots from the rising DOC. And we were overdone. And at this particular point, this is where I show it. So we ended up with the opening of the proverbial mouth, so to speak, of the orange. And that doesn't have to be right at each other. It can be also in a separation. And particularly when we get to peaks like this, I start to look for the first evidence of breakdown, and that's usually the steel crossing below cyan as a trigger, and particularly if green is coming from below. Now, sometimes this won't break down right away. In fact, oftentimes it will even make an additional high. I usually like to get into them though when I have my green coming from above, because it certainly adds to the value of it. And a similar situation happened here at the end of the day, and you can see the exact same configuration. This one was a little bit better in the sense that it had lower shakeout already. This one also, I believe it was lower as well. Let's get the actual number. That's the easiest way to verify it. I have to actually be in there. There we go. So 30.12, and the next bar was at 29.55. So it did in fact have that drop, but it's like being up there at the new high. Sure, it can make a new one, but still. You have the elements going in the right direction. It still took a bunch of bars, and you still could have been waiting for the ABM, and that would have been much closer to the DOC spread right there, catching it right at the beginning of it. And then it just trailed down. Really wouldn't be looking for more than the 50%, which certainly filled in all of the positive extremes. And then we ended up with a reset right down there. And it pushed us right back over the 50, which did what? Got us all the way back up. Now, I'm always cautious of the red dots that come before I've reached 100%. It can signal that you're coming to an end move, but more often than not, when you're at the hundreds is where the red dots become a little bit more interesting. And then you're looking for this configuration here, that steel orange, particularly in the crossover, because the crossover is a significant element of distribution overweighting, particularly when it comes to the algo, and then that green obviously coming from above. And didn't take long. I mean, it was interesting because this was a whole pre-Apple rise, very overbought extreme. What was nice about having these lower extremes, though, is they got a target all the way down to 1875 here. So by the time it bounces up to 26, I've got a pretty decent range built into that configuration, and sure enough, filled it quite nicely. Then we ended up with a gold below 50%, started out immediately, and then boom, traveled straight down, and then we've pretty much just traded sideways since that point. And with pretty much record numbers from the Apple, and that you would think that unless there's a bunch of significant broader issues but that fail, probably again one of those sell the news, because most of the hype came before, and but still things are healthy. Is there a whole lot of room for a rise? Sure. Will there have to be a catalyst for it? Not necessarily. The catalyst itself can be the fact that we're already reaching a point now where anyone who decided to trade and go away in May is already looking at a situation where they're missing out, and that oftentimes can cause people to come back in, like I said before, to chase yield. And that we didn't get a significant sell-off for the end of the month means that there's still plenty of people who are happy just holding where things are at. No significant news to sell on. Now that can change at any point, but this particular step with the new money coming in, we could see a pretty nice spike. So looking for a bit more volatility as the political season heats up, because that's really going to be a driving force as to what the expectations are, and there's going to be a significant number of people playing that game leading into the end of the month, even in towards the middle of the month. There's going to start to be a pretty clear picture as to what forces are leading and what that might mean policy-wise, because that is really going to impact things, and whether there'll be gridlock or you still have a uniparty capability as far as the direction of things. So that is the long and the short of it. The indicators obviously went out, and it's been very effective with the setups that we have from this. I've worked on a couple other configurations, and like I said, we'll be sending those out as soon as I've completed my testing on them, and it should be exciting as well. As always though, trade well, and I will put up relevant charts on the Skype chat as needed.